3, 2, 1. All right. Yo, welcome to another episode, of learning about indicators, how you can use these indicators to your advantage, and to be able to read the market a little bit better, to be able to understand the market a little bit better in the situations that you're in. Remember, anything mentioned on this stream, VOD, is not financial advice, should not be used to make financial decisions, but it is everything and only for entertainment purposes only. Now, that being out of the way, Stochastic RSI and RSI, if you really want to know the differences between the two and how they're calculated, feel free to Google it. You can go to investopedia.com and you can get the definition yourself. I'm not here for the definitions. I'm here to tell you how to use it and things that you might notice with Stochastic RSI and things you might not notice with Stochastic RSI. So why I like Stochastic RSI not over the RSI, but I like it complementing the RSI, because at the end of the day, RSI is the relative strength index, and the relative strength index can help us try to decide how bearish or bullish a market is. And with that being said, the RSI, finding downtrends in the RSI, that's always a nice little benefit you can add to yourself. You won't always see these kind of downtrends in Stochastic RSI, and I don't relatively recommend drawing trend lines in Stochastic RSI. You can, but I'd probably start using trend lines in Stochastic RSI once you've used it for quite some time to your advantage. And moving to the actual Stochastic RSI in general will move between two key points, whether it's between 100, sorry I didn't draw it at 100, I can't draw it perfectly, and between 100 and 0. It cannot go above 100 and then it cannot go above 0. While you can draw the chart here at 109 and whatever, it will physically never be able to go above 100, right? And it will physically never be able to go below 0. So when it is above this dotted white line right here, which is about the 80 marker, you can regard this area as overbought. If it's below this marker over here, which is about 20, you can start to regard it as being oversold, but I wouldn't take it in the same consideration as overbought and oversold for RSI. Things with Stochastic RSI can remain oversold for a longer period of time, and things can remain oversold or overbought, right? And I'm going to show you examples through this little stream where situations like that can happen and why they happen potentially. So that's just the basics of Stochastic RSI here. What you do really want to look for, and you want to start when you're just starting using this off, you want to be using it on higher time frames. Lower time frames, you have to kind of understand how you have to get that experience, that viewing experience to understand how the Stochastic RSI really moves. So if you're really just starting off, I would recommend 1 hour and above, just because that's a little bit better for understanding and being able to kind of get a better read, because on the lower time frames you can easily get bamboozled. You might think it's the bottom here, but it keeps extending, and then you get wrecked and you're like, oh, why did I get wrecked on the Stochastic RSI? Well, because you believed in it too much, right? So if you're starting off, the higher time frames start moving lower. That's the general advice I always give. Start high time frames when you're starting off trading and move lower and lower and lower until you can understand the lower. If you start lower then move higher, honestly, it's not that good, and you're going to be a little bit unhappy with the situation that comes to you. So how did we? Let's just kind of start off with what Stochastic RSI can tell us, and we'll go to the 3-day chart. We'll go to the high time frame chart to try to understand what Stochastic RSI means and how we can implement it with RSI in general, right? So with Stochastic RSI, the way I like to see it is it essentially tries to tell you how much more juice does the RSI have. So if you haven't seen our RSI lesson, where we break down the RSIs into our magical regions of 36, 46, 56, 65. I'm not going to make it perfect here, and I don't know why my tool isn't doing the tool thing right now, so I'm just going to have to fucking do this manually. the stochastic RSI kind of gives that ability to tell us like how much more juice does the RSI have, and what kind of bearish divergences you can get from that indicator. Let me just kind of fix this up here quickly. I want to make it thicker. There we go. Right. So when a couple days ago on the 3-day, whether you're watching my TikTok or Twitch streams or whatever, I was telling you guys I don't think that we can go much higher, because the stochastic RSI at this point has been already overbought for multiple days, and it finally hit that 100-point region over here. Now, doesn't mean it can extend at a 100-point region if it wants to get bullish. True, but once it starts reaching into these regions, and you start noticing that even though the stochastic RSI has been overbought for all these days, but the RSI itself does not want to go overbought. It's kind of telling you in a sense that like, hey, we're kind of reaching max extension in a sense. And if you're more of a long-term trader, you know whether you shorted at 24K, 23K, whatever, you'd be relatively happy right now because the price is 20,676, right? If you're a short-term trader with high leverage, maybe a little bit harder. Higher leverage is, higher leverage means you're trying to actually snipe it harder. So you have to kind of use that to your advantage, using that lower leverage strategies. Of course, I don't promote higher leverage strategies, only use high leverage. If you know what you're doing, if you don't know what you're doing, you're probably going to get wrecked. And that's just the story that it is. But this, on the higher time frames, can tell you, hey, we're getting to these overbought regions. Then you go look at the RSI. You're like, okay, what's the RSI at? And the RSI here was 46, which is our general deny zone, right? We saw an RSI 46 deny around here. We saw an RSI 46 deny here. It's not really bullish for the RSI to be under 50, just the basis of RSI, because RSI under, like the basics of RSI, under 50 RSI is bearish, and above 50 RSI is bullish. But that's why we have this special breakdown of the RSIs that we drew here. If you haven't seen our video about it, go check it out in our other VOD on YouTube or Twitch, and you'll be able to kind of understand why I draw these levels, because it tells me how healthy the market is, right? So if you haven't watched that, go back, watch it, and come back to this video. And knowing here, this is where I kind of knew we probably weren't going to go any higher, especially when we saw the bullish, quote-unquote, bullish CPI news, and we didn't even get to go over 25K. The stochastic RSI is topping out. We've seen the stochastic RSI top out before, and this is when, in bear markets, the stochastic RSI can be very useful, right? Where we saw this at about 48K when we were topping out here after that little run-up, almost kind of similar to what we saw right now, where we kind of saw this little run-up right here, and we had that topped out stochastic, but look, right? Then you want to start looking for bearish divergences between the stochastic RSI and using that to your advantage, right? So the last time we saw a top out in the stochastic RSI, what did we see? We saw about a 48K, we saw 100 stochastic RSI, and we saw about a RSI value of about 56, which is in that bullish breakover in a sense, right? And then the next time we saw this, right? And we're going to go through this middle part later, but then the next time we saw this, right? What did we see? We saw a value of about 25K. We saw a value of about 46 RSI, plus or minus. And you right there, there's a immediately from here to there, there's already a bearish divergence within the indicators, telling you like, hey, if we were at the same stochastic RSI a couple months ago in March, or April 1st for that matter, if we were at this indicator, and we're at this indicator here, are we really that much more bullish right now when we have this type of situation happening? And it really isn't bullish, right? Same indicators in a sense, bearish divergences, lower RSI, right? The downtrend line, like the downtrend is like obvious here, right? So that on a higher time frame, that's how you can use stochastic RSIs to your advantage, and that more so in a more bearish movement market. And you're more in a more bearish movement market when you're below the 9 EMA. And if you haven't watched our EMA video, make sure to check that out too. I'd honestly make sure to watch the EMA RSI video and then this video first, if you're watching this on VODs, just so you can get a better understanding of what these 9 EMA means. I'm not going to go over it right now, but the 9 EMA, anytime you're underneath the 9 EMA, you're pretty much bearish, and pretty much what's been happening throughout this entire period. We were underneath the 9 EMA. We kind of started going above it. We had a few weeks above the 9 EMA, but we weren't really pushing really high above it. And the moment we saw that crack below the 9 EMA right here, that's when the kind of shows started to kind of pop off at about 22.8K. We saw that kind of decline right here. The RSI started to push down, and we are where we are right now, right? But stochastic RSI can be also, especially in a bull market situation, stochastic RSI can be a bit of a false signal in a sense, to know when to short or when to long, right? So let's go take an example during the bull market where stochastic RSI would have fucked you. But this is when you have to use 9 EMAs to kind of gauge what kind of market you're in and how to use it to your best advantage, right? So if we're looking at the 3-day stochastic RSI, remember what I told you at the beginning. Stochastic RSI, yes, it can go to 100, but it doesn't mean it's going to go immediately back down, right? If it's very bullish, it's just gonna extend itself, and the longer it extends, true, the higher chance it has to fall, right? So, but at the same time, when it's a very bullish market, you don't want to be fucking around with it in a situation like this where you're multiple days above the 9 EMA. You see how we're above that 9 EMA? If you see yourself, I don't care what time frame, but you know, lower time frames are harder to play if you're very new. So like I say, start high, go low. But if you're just looking at the 3-day chart pattern here, and you're like, oh wow, stochastic RSI is topping out, I should be thinking about a short. No, you shouldn't be thinking about a short, because it's not even willing to go below the 9 EMA, and the 9 EMA is a very, very bullish trend to be above, and if you're above the 9 EMA, then you really shouldn't be shorting unless you want to be doing the quote-unquote predictive shorting, or whatever you want to call it, which is honestly just gambling, because you're just hoping something works out for you, even though you don't know the outcome, because at the end of the day, you know, leverage trading, whatever trading, you're putting money on an unknown outcome, so you are gambling, whether you like to admit it or not. So when stochastic RSIs in bull markets are like this, you really don't want to short these areas, because even if you did, right, you could have shorted here, you know, you could have shorted 19,000, and then when it touched the 9 EMA at 16,700, you know, that would have been your signal to like, hey, you know what, we didn't even crack it if you did short this, because, you know, the stochastic RSI was extended for so long and it's meant to pull back. Yes, you're going to see a pullback sooner or later, but at this point in time, like, this was still very bullish, right? So you don't want to use the stochastic RSI, low time frame or high time frames. Lower time frames, I'll try to show you some examples later to kind of gauge this a little bit better, but you know, when you have to be able to identify what kind of market you're in and how you want to use stochastic RSIs to your advantage, right? So the same thing kind of happened here, right? If we still kind of follow that stochastic RSI theory, and as a little note here, if you notice your stochastic RSI falls and it doesn't even go into the oversold range, shit's hella bullish. Don't even think about shorting in a sense, because you're probably just going to get wrecked, right? So the same thing happened here where we kind of saw that stochastic RSI top. But once again, you know, yeah, you could have maybe tried to plan it. You know, you could have been like, oh, RSI was at 95, which, to be honest, not a terrible RSI to short at. When something's at like 95, 99 RSI, there's a pretty good chance you can throw in a short, and it'll probably work out for you. Not financial advice, of course. But if you start noticing your RSIs are hella overbought, especially if you go from this period to a higher RSI with another higher stochastic RSI, that could be maybe an advantage to be like, hey, you know what, there could be a good short here because I think the market's a little overextended. So from 40K to the 9 EMA to 30K, you know, a 10K range right there, you could have made a little bit of bunko, right? But this is how you knew the market was bullish back then too, because the stochastic RSI went from all the way here, all the way from 100, all the way back down to 0 down here. And what happened? You literally didn't even crack the 9 EMA. You went from 40K to 30K, and then the market continued again, right? But then you kind of started seeing weakness in the stochastic RSI as it went higher and higher. And you can even see in the 9 EMA, and why I love the 9 EMA, and why I make it into a stair chart, because the stairs literally try to tell you how much up or how much down is it going to, like, you know, you can literally see physically stairs going up, stairs going down. And then here physically you started to see that stochastic RSI getting weaker and weaker and weaker as the market went up higher and higher and higher. And this is where we kind of went back on how we kind of knew the market was going to start falling apart around May last year, because we kept seeing a higher price and a lower RSI, and even here a lower stochastic RSI. So how can you say you're as bullish as you were here and here if you're going up a higher price, but this RSI, the relative strength index, is literally telling you like, yeah, we're not that really bullish. You know, we're like, yeah, we're going up, but people's belief in the market is not going up, right? It's literally telling you right here, belief in market is not going up. The price is going up, yeah, cool, but the belief in the market has just been going down. You know, you're telling me at this RSI level, at about 95 RSI, when the peak was at about 40K, You're telling me the guy up here at 60, when we were at 63K, the RSI here was barely above overbought level. At 68, the stochastic RSI wasn't even going above. You can always kind of just draw a middle point if you really want a nice little middle point for the stochastic RSI, right? Above the middle point, bullish; below the middle point, bearish, right? Not a very high level analysis there, but it's a pretty decent analysis. If you're above the middle, you're probably bullish. If you're below the middle, you're probably a little bit bearish, right? So kind of like what we saw here when we started going into the secondary bull cycle of the last year's market. You can kind of see at this midpoint it had a little battle and then it continued up, and the kind of pattern continued, right? So this is why I'm a big fan of trend lines, right? I draw my trend line and then I know, okay, trend is your friend till it's not. The trend line broke here, boom, wouldn't you believe it? Shit started to go down, right? And then we went into a bearish cycle of the stochastic RSI, which is something you do want to watch out for, is when it starts going into either a bearish cycle or more like bullish cycles type situations like here, right? The more kind of stochastics you see at the bottom, or the more stochastics you see ranging at the top, the higher chance you're moving into a more bearish or bullish situation, right? So same thing kind of around here. You had your stochastic RSI waving a little bearish here, then it started waving a little bullish over here, a little bit of bearish, right? And then and so forth, and where we are in the market right now, right? So even right now, when we had that little run up right there, right? You can kind of see around the middle point of the stochastic RSI, when we had that run up back in about February to March, right? We kind of saw that middle line holding, and once that middle line kind of fell, well, so did the rest of the market, right? So that's just kind of the overview basis on a higher time frame, how you can use stochastic RSIs to your advantage, and kind of when you should use it, when you shouldn't use it. Stochastic RSI works way better in a bear market, as you can see, right? Because in a bull market, you can get easily bamboozled, right? You'd be like, oh, it's high stochastic, it should be going down, but never disrespect the EMA, never disrespect the actual RSI and how bullish that was back then. Look how long we were overbought. We were overbought from October 2020 to legitimately like March 2021. Like, that was so bullish. Like, it didn't even want to go below 65 RSI. For all intents and purposes, it was at least from October 2020 to January 2021, right there, right? That's ridiculously bullish. You don't want to be shorting that shit. It's too bullish. Don't fucking short it, because it's a fucking bull market. Why did I go short in a bull market? It makes no fucking sense, right? It's not what you want to do. So, and you can apply this to the weekly, right? Let's go to the weekly. What's been happening, right? And what's been happening was, when the market is truly bullish, you'll see that overbought stochastic RSI, just like we saw it over here. But what happened when the market started getting a little bit in decrease in interest? Right here, we denied it right there. And what happened right now? Well, shit, we denied it once again, right? Once again, we're denying this area again, just like we denied it at 46K, right? The same thing we looked at the 3-day chart when we were like, oh, look at that. You apply it to the weekly, and you're like, oh, look at that, right? The 3-day builds into the weekly, so if the 3-day is looking bearish, then there's a very good chance that the weekly is gonna, go into the same type of movement, right? You need 2 3-day candles and a 1-day candle to make a 1-week candle, right? So that being said, this is kind of the areas that we want to watch out for, right? These are kind of like, hey, even right here on the 9 EMA, right? If we just kind of delete these meme lines, what's been happening on the weekly, right? When we were looking very bullish here, right, and the stochastic RSI was bullish on the weekly here, what did we see? Above the 9 EMA, stochastic overbought, probably not a good time to short. Stayed above the 9 EMA the whole time. What's been happening pretty much since November 2021? Stay below the 9 EMA, a little bit above the 9 EMA, down. And what happened here? We had 1 week, last week or 2 weeks ago, the candle tried to stay above it, and then it got absolutely fucking demolished. Like I always say, if you ever see like a major indicator, like a major trend being attempted to break, I always say give the other side a week, right? If the other side is going to be legit, if the other side's going to defend their area, they're going to defend it here and send it back down, right? Same thing you could kind of see around here, right? They attempted it over here, and then they broke it over the 9 EMA here, and then started the new trend above the 9 EMA. The 9 EMA is goated. You can literally just trade off of the 9 EMA theoretically and have a nice day for the most part, and have a good time, right? So even right now, looking at the weekly, look how bearish this is, right? Let me just kind of expand the RSI down here, just to make it a little bit more clear, right? But look how bearish this is, right? We essentially we went from, for the first time in a very long time, to an oversold RSI on the weekly. And I'm just looking on the perpetuals future chart. We should be looking on a different chart right now, but if you go back in time, we haven't done this in weeks, in years, right? So the fact that that happened itself was already a very bearish signal that we hit. Let me just go to a different chart to show you the long term, right? That shit, this is the lowest RSI we've seen essentially in Bitcoin's history, right? And that itself is already a fucking bearish signal of the fucking century. This is a whole history trend, motherfuckers. This is a whole trend that we haven't seen broken in years. We're talking not even the fucking 2018 bear market went that bad, right? And we still haven't seen, in my opinion, the bottom of the bear market, because of that little trend break that we had here for the first time, actually going oversold on the weekly, which is never good to see. And the only thing that's maybe keeping us alive right now on this RSI is the MA trend line, which, by the way, you can get. Everybody has the same trend line. You can go here, RSI based MA. The moment we start going below that RSI based MA, that's when this shit show's really going to start to really fall apart right now, because we're probably going to, at best, maybe see a double bottom RSI here, or maybe, if we're a little bit more bullish in a sense, maybe we're going to see something like this coming up in the next following weeks, or maybe we find support at 30 RSI, and then we go up one more time. But it doesn't mean we can see 16, 14, 13K before all of that happens, right? So whenever you can also just use the RSI MA baseline, and notice that anytime, especially on the weekly, when it starts to go below it, that's when things start to get bearish. When it goes above it, you know, goes a little bit bullish, like we saw here, like we saw here, like we saw here, and like we saw a little bit here. But it was much weaker. This little push that we had right now was much weaker than the one we saw at 47K, which is just showing us that people are less interested in the market, right? So that's how you kind of want to use Stochastic RSI to your advantage on these higher time frames, to be able to really know, like, honestly, when to short the market, especially when markets are starting to get to their topped out region, like especially on the weekly. Like on the weekly, especially in the last few months, you would have been able to just look at the top stochastic, short it. The next time it tops out, short it. The next time you topped out, short it, and you'd be pretty damn good, right? Not financial advice. But that being said, let me show you some lower time frame examples before we move into Keltner channels, because Keltner channels are relatively easy, but they kind of can help out Stochastic RSI, Stochastic RSIs and calculations a little bit. But let's just go to like a 1 hour time frame. Let's see if we can find anything. Like right now in the 1 hour time frame, where what are we seeing, right? You kind of want to look for confluence, right? We're seeing an oversold Stochastic RSI. It's not exactly at zero. Sometimes on the lower time frames you won't see it perfectly, but the closer to zero, the better. The better it will be, right? We're seeing that the 30 RSI is holding, so it's not actually going super oversold. We are bearish right now, but it's not super bearish, because if it was super bearish, like every other time we've seen on the RSIs, let me just fix this, right? If we saw it on RSIs, that's when it's bearish, when it's fucking really oversold, right? Or like over here bearish, right? Right now what we do want to see is maybe a one more push down to push us into that area, and then see that extended Stochastic RSI and move it, right? And I'll kind of give you the 3 basic RSI patterns you'll most likely see in your life. And this applies on either side of it. I'm just going to show you the downside. So when the Stochastic RSI goes down, it can either do one of two things. It can either go for a little like bounce in between here, right? Anything, if it denies anywhere underneath the 20 Stochastic RSI, it's hella bearish, and you're probably going to see a lower low. The next pattern you can see obviously is a V bottom up, and you'll go back up, and things will just kind of bounce back themselves type of deal. Or there's the third pattern, which is the harder one to read, and the one that kind of bamboozles more people often than not, is the one where I'm just going to give you ranges where it can do this, where it goes to about a midway point or maybe somewhere around here, and then it has an inflection point. It'll have an inflection point where it'll decide to go either up or an inflection point down. So the moment you see it either curving up or curving down, you can use that to your advantage to be like, hey, you know what? This is actually not going to, move down. It's actually going to move the other way, and we're going to see a little bit higher, right? Those ones are a little bit harder because they usually come around the middle point, and they're a little bit harder to read. But the easiest ones to read, of course, If you see stuff starting to range down here, that's when you know you're in a bearish range, right? Same thing. If you're up here, you're maybe more in a bullish range type deal, right? On the lower time frames, right? So small little thing there, just a basic pattern. You can use something like this. You know, that's the most bearish one. This is a semi-bearish one, and you know, this is the kind of standard bullish kind of stochastic RSI reversal, right? So that being said, let's introduce the Keltner channels and how Keltner channels can be used to our advantage with the stochastic RSI. I was going to go over the Bollinger Bands today, but we'll leave Bollinger Bands for another time. And in all honesty, if you are really interested in Bollinger Bands, there's a lot of YouTube videos on Bollinger Bands. They're not hard. Relatively simple. They're almost like the Keltner channel. They're almost like the Bollinger Bands. They're both kind of the same but different. And for my Keltner channels, I like to set a multiplier to 1 on the lower time frames. On the higher time frames, I've been liking a on the higher time frames, I've been liking a multiplier of 2. On the lower time frames, I've been liking a multiplier of 1. And the way Keltner channels really work, and how you can kind of use stochastic RSIs to your advantage here, right? Keltner channels, especially on multiplier of 1, and why I'm expecting a little bit of a bounce up right now, because we're kind of oversold on the 1 hour. We're kind of extending down here because of two things. Number one, we're outside of the Keltner channel. So these Keltner channels, in general, they act like a magnet. Whenever you're outside of it, on either side, up or down, it wants to magnet you back in. If you're outside of it, it's going to magnet you back in this way. If you're below it, it kind of magnets you back in that way, right? So right now, we're a bit outside of the Keltner channel, and the Keltner channel, more likely than not, is going to try to magnet us back into the trend. Some kind of trend, you know, we can kind of try to imaginarily, I don't know if that's a word, imaginarily draw these potential future Keltner channels on how they could look. And maybe, you know, there's 3 levels of the Keltner channels, and I'm going to kind of explain how you can use that to your advantage in a little bit. But whenever you are kind of seeing a confluence of, you know, oversold RSI or very close to oversold RSI or oversold stochastic RSI, and you're seeing yourself very outside of the Keltner channel, right? You know, you kind of look at the distance, you know, the farther the distance between your candles and the Keltner channel, the more likely that you're going to bounce back in. Now, I will say, if it is a very bearish situation, and this does happen, and this has been happening for the past few months, it won't magnet you back in. It'll do a little bit of like an L-shaped movement, where it'll just move sideways. And it'll wait for the Keltner channels in the 9 EMA to catch up. Oops. It'll wait for the Keltner channel in the 9 EMA to catch up. So let's say it goes something like this. Right, let me make that blue to make it a little bit easier to see. Right? You'll kind of see that they'll kind of move in a kind of L-shaped pattern this way until it hits it, and then it goes back down, right? Let me see if I can find an example in that. I think I can show you on the 4 hour right here. Let me see if I can see an example on that. Why isn't my Keltner channels loading? Right? Not exactly perfectly here. Let me see if I can find a good example of that. But here's an example, you know, Keltner being outside of the Keltner channel, zapping you back in, being outside of the Keltner channel, zapping you back in. And when you're ranging within Keltner channels, that's just the market ranging and being a piece of shit. But even right now, this was kind of an L-shaped movement. Not exactly per se, in a sense, but we pretty much saw like no real, you know, magnet back into the Keltner channels. It was just a very sidewaysy type situation with a little bamboozlement from the market, and that's part 1 of Keltner channel. I kind of want to go into more. Let me kind of expand these Keltner channels for the new guys, so it's a little bit easier for you guys to see. But in general with Keltner channels, what I've seen is, let me just kind of expand it here. The general kind of theory of Keltner channels I've seen over time is, if you hit the top of the Keltner channel, and obviously you can't break over it, your next most likely spot will be the middle of the Keltner channel. If you hold the middle of the Keltner channel, your next most likely spot will be go retest the top of the Keltner channel and see if you can break out. You can never really use Keltner channels to like predict if it is going to break out, but you can at least say if you held the middle, your next most likely position is going to be somewhere at the top, right? So if you break the middle position, your next most likely touch will be the bottom of the Keltner channel, which we saw here, and then you kind of can see the pattern, right? If you hold the middle, if you don't go above the middle, you go back down. If you go back to the middle, You don't break the middle, you go back down. If you break the right, and this is why I like the multiplier of 1. I think multiplier of 1 is a little bit better. Right now we're on multiplier of 2. And let's just kind of set that back to the multiplier of 1 right now, because I've been using multiplier 1. I've been just kind of testing multiplier 2 recently. I'm a fan of multiplier 1. Where you can kind of see, if we kind of zoom in, let's double click here, right? We double click here, we zoom in. How's the market doing? Doing good. Let me just delete this stuff. So when you come back to the Keltner channel, hits the middle, goes back to the bottom, breaks this part, goes back to the top, breaks the middle, goes to the bottom, right? But like I said, you can't really use the Keltner channel to know if it's going to go heavily outside of the Keltner channel. Only once it does go out of the Keltner channel, you can use that to your advantage to be like, hey, this might be getting a little bit oversold right now, and maybe I should like think about taking profits or being in a situation to maybe take a little bit of profit. And I wouldn't be doing that right now because I'm still waiting for that zero, especially on the 4 hour and above. The 4 hour and above, it does seem on average that it does move between 100 and 0. We are getting pretty close to that 0. I would like to see that more bottomed out kind of cup type situation that we're seeing right now. I think we could get one more push down in this market. I think 2300 is probably the most likely next stop before we get a bounce up again. But especially how the stock market and federal chairman today came out and started talking shit about the market, long story short, it doesn't look too amazing. So that's how you really want to use Keltner channels to your advantage, right? Especially if you're like, and then now combining it with the stochastic RSI, like looking at these areas on the 4 hour, you're not very bullish if you can't break the top of the Keltner channel. If you see yourself consistently, attempting the top Keltner channel regions, and you have a really overbought stochastic RSI region like this, you're most likely going to see a push down because they're literally not willing to take it over these areas, right? And a little fun little extra tip: watch for triple top stochastic RSIs. They don't appear often, but if you ever see a triple top, and the triple top has to be essentially what we see right here, where it stays above that overbought area. If you ever see a triple top stochastic RSI, I'm not saying financial advice. I'm just saying I haven't lost all bear market shorting this pattern, where if I see a triple top stochastic RSI on the low time frame, high time frame, whatever fucking time frame, I'm going to go in and try to short that, because not on the first one, not on the second one, obviously on the third one, where you want to get that third hump in. And once that third hump came in, obviously we saw a little bamboozlement, and this was obviously a fundamental pump and dump over here. People getting debated and put into longs and whatever. That's how you want to kind of use the stochastics and Keltner to your advantage. If you notice, and this is one of my old favorite kind of patterns, is when when do you want to take profit, right? When do you short? When do you take profit, right? I short very simply especially when I see these on like the 22 minute or the 27 minute outside the Keltner channel, overbought stochastic RSI, either close to, or either it's a weak RSI, let's say it denied here, right? If it was like a weak RSI, or an overbought RSI or close to overbought RSI, kind of like we saw right now. And that to me already, and this is kind of going more into the low time frame regions, this is to me like, oh, easy short, overbought, outside of the Keltner, gonna magnet you back in, right? And what did we see down here? We're kind of seeing that L-shaped movement right now, right? That's what I was talking about a little bit earlier. And you'll probably see the more L-shaped movements on the lower time frames, not especially on the big time frames, where you kind of see this L-shaped movement where you're like really bearish, but look how bearish we are. The last time we hit a stochastic RSI of 100 was at the price of 21,800 and an RSI level of 70 essentially. Now the next time on the 22 minute we saw 100 stochastic RSI plus or minus was at the value of 20,700 and the RSI value of 40. To me, that's already kind of being like, holy shit, that's kind of bearish, because all of this price action that took the stochastic RSI to overbought, the RSI was only able to gain a level from about 25 to 30, 25 to 40, comparing it to last time where it went from, right, 23 to 70, right? Right here, that was obviously like a bullish movement. Right here, this is a fucking bearish movement, right? And you can tell because the stochastic RSI is already fucking topping out. It's not really willing to go into that. You see how it's kind of denying that bottom of the Keltner right here, and it's not looking too fucking hot, right? So that's how I kind of use these stochastic RSIs to my advantage, to be able to kind of tell, like, hey, is the market hot? Is the market not too hot right now? And how can I use that to my advantage to move this, to maybe make a play or when to take profit. People always ask me, well, what are my take profit targets? My take profit targets are usually when I think the momentum of the market has kind of bottomed out, like here on the 22-minute, or let's say, what did I took profit today on SNX. Today I shorted SNX at 311, somewhere around here, right? And this was just the purely FOMO, not a FOMO base play, but it wasn't a base play off of Stochastic RSI. It was just basing that Bitcoin would just keep crashing type of deal. But what did we see here, right? This is a very bearish movement, and this is when you know it's very bearish, right? When you start to see the 9 EMA, I don't care what time frame, the higher the time frame, the more important, right? If you start to see the 9 EMA go below the bottom of the Keltner channel, that shit is hella fucking bearish as fuck. And that recently, and I made that video on TikTok recently, if we go to the weekly BTC, we actually started seeing that not very long ago, right? Let me delete these meme lines so it's not so terrible for your eyes. But recently, this has happened on the weekly BTC. For the most part, markets are markets until this happens. When the 9 EMA goes below the Keltner channel, don't ask me why. This is just the pattern I've seen. This shit is hella fucking bearish. The same situation in a bull market, when the 9 EMA goes above the Keltner channel, then it's hella bullish. Now we're getting the reverse fucking of the fucking. I'm starting to think we might see something like this, except here, because only just recently, like as of June 20th or around that area, that week, that was the first time we saw the 9 EMA go below the Keltner channel. And the 9 EMA right now, if we really, really, really zoom in here, right, a couple weeks ago, what happened there? It didn't even, that 9 EMA tried to touch it, denied the Keltner, and now the Keltner channel is ranging, or the 9 EMA is ranging below the Keltner channel. So this is why I really like the 9 EMA and how to combine the 9 EMA with other little indicators to kind of give you that advantage to be like, hey, are we that bullish or are we not that bullish, right? So when we were in this market right here, we weren't obviously as bullish as we were here because the 9 EMA was above the Keltner channel, and right here the 9 EMA was within the Keltner channel, right, on the weekly. So that already was kind of giving you a little signal like, hey, why are these two so different? If we're as bullish as we were and we were going to fucking 300 fucking K, if we were going to 300K, then why the fuck was the fucking 9 EMA not above like it was here, right? So now, just recently, that 9 EMA just started to go below it, right? The same kind of fucking thing that we see here on these lower time frames, or if we go back to SNX. Why is SNX performing worse than anybody in the market right now? Look, right, if we're looking at the 27 minutes across the board right now, we have waves, SNX, Rose, Bitcoin, right? Bitcoin right here, and SNX here with that 9 EMA below the Keltner channel. The 9 EMA is a little bit below the Keltner channel, but not as bad right now. It's like pretty tight over there. You can almost say it's even, right? So these are the little things you gotta want to watch out for to kind of give you that maybe slight edge in the market to kind of see how the market is truly feeling, right? So right now, kind of like looking on the market, like I think, in my opinion, we should go to at least 2,300 before we see a bounce up. Looking at the 1 hour stochastic RSI, you can kind of see everything. You can just kind of backtest it. Go every time around these areas and see how the stochastic RSI performed. Look at the 9 EMAs, look at the Keltner channels, right? Even right now, even though we are kind of like not at, sub 30 RSI, and we're not exactly, we're still below the Keltner channel. We're still not above it. It's not very bullish right now, and it's not looking, too amazing, right? So, long story short, and I think we've been going for like a little bit over 40 minutes now, but I think it was a pretty good session. Long story short, kind of let's get a last overview of the EMAs or stochastic RSIs or whatever. What we really want to look for is higher time frame. Higher time frames is what matters. They're way stronger on the stochastic RSIs. Stochastic RSIs, as you can see in these areas, pretty much and this area right here, and I kind of want to go back to this area quickly. That's when shit was bearish over here at 33K or 32K. Number one, we weren't going over the 9 EMA like we did here. Number one. Number two, this wasn't even willing to get to an overbought fucking stochastic RSI. That shit was just fucking bearish as fucking fuck. Just fucking send it down. That's why I wasn't closing my short on Ethereum. When I opened my short on Ethereum at 35.63, I had no interest in closing my Ethereum short at 35.63 because the market wasn't bullish. The Bitcoin wasn't even trying to go above the 9 EMA. It wasn't even trying to get an overbought stochastic RSI. Now we had a little bit of an overbought stochastic RSI, but we couldn't even regain the same levels that we had over here, right? We're much lower. There's definitely bearish divergences, and until those bearish divergences are broken, until we see, you know, the bullish take right now is if we just saw a 360 and we saw something like this, and then we see, you know, maybe we'd see an attempt at 31K or something like that, right? If we started to see a bounce here, right? But the most likely thing that's going to happen, because it's a bear market, is we're just probably going to go back down here, and then we're going to see another bounce up. You know, we're going to maybe see something like this, and then kind of see it bounce back up, right? So that's my spiel on Stochastic RSI. If you're just tuning in right now, don't worry. VOD will be uploaded by tomorrow, so don't worry about that. And let me put my hand over the camera to signify it is over. Let me put it there for like 10 seconds. And I will take questions right after, I suppose. Just doing this for cutting the camera. All right. Well, that's my spiel. That's the lesson of the day. Not financial advice. Now, who's going to donate me some subs? God damn. Shill. Don't forget, !Mexi if you're looking for a new exchange to trade on.